The economy hasn't been favorable, from rising inflation to escalating geopolitical tensions. There's also been a big question about how far the markets can fall, and this has been happening for several months now. Since the market started showing signs of declination, financial markets have been predicting how things would go. We all know Michael Burry to be one of the greatest investors we have today. He's now warned the U.S. stocks have a further tendency to fall. He compared the current market downturn to the beginning of the dot-com crash, and now he has given the world another prediction. Burry has been controversial in his economic world, but you can only give it to him when it comes to investments and financial predictions. His experience and professionalism in investments give him an edge over others. He has come again with another warning that stocks will keep falling. He also predicts that many investors would suffer painful losses. Why did he give this warning? What even made him say this? In this video, we'll be giving answers to these questions and more. We will also discuss the chances we all have in today's economy. So watch this video to the end because it's going to be very interesting. Now, over the years, the great investor Michael Burry has made a big name for himself, as his prediction of the subprime housing market crash was the basis for the movie The Big Short. Before even going deep into the problems we could be facing soon, Burry has an investment prowess and has gained more attention. Many investors like to track Burry's portfolio moves and worth towards how he plans his investment. One of the things other investors like about him is his precision in trading, which always captures their imagination. But now he has come to give us another shocking news in the economic world. The investor of The Big Short fame warned in a tweet that there were 218 companies with a primary stock listing in the United States, annual losses exceeding $100 million, and a market capitalization of around $1 billion. Among these companies, 29 of them boast market caps of over $10 billion and are worth a total of $655 billion. In his response to a tweet around August, Michael Burry said, saying it again, all the silliness must go. He complained that the COVID-era silliness had returned to markets. He also said that such speculation had inflated past bubbles but eventually disappeared every time. The boss of Scion Asset Management also depicted that 13.48% of U.S. stocks closed above their 200-day moving average. You can imagine the percentage rate. When the market went down in 2009, this rate was 1.2%. In 2020, it spurred to 2.8%. Burry also expects stocks to drop significantly lower before bottoming out. He predicted in May that the S&P 500 could drop as low as 1,900 points, or another 53%, over the next few years. This is based on how we've experienced past crashes. He has also dismissed the rebounds in stocks this year as bear market rallies, which temporary reprieves along the route to an unavoidable disaster. Even the Federal Reserve had to raise interest rates again, which led to an even more bleak financial landscape. Michael Burry is currently predicting that there will be a massive stock market crash very soon. In fact, he's predicting a crash on the scale of the dot-com bubble and the Great Recession that happened in 2008. If things are not adequately considered, many investors will suffer a huge loss. Burry said, "Another feeling I'm getting is mid-late 2000, he said. Free cash flow totally on sale and ignored, while former momentum stocks are coming down, but not far enough, and darling, better businesses still had ways to fall. Value was about to take off years despite more crashes on the way." He confirmed that the current market backdrop reminded him of what happened in the second half of 2000. If you remember, some unloved stocks were trading at bargain prices, but high-flying names had a further fall. With all his tweets and warnings, Michael Burry remains confident that we're simply embarking on an early journey of a much bigger problem. To buttress his point, he took his time to comment on the comparatively low trading volumes we've seen during the 2022 downturn so far. These trading volumes have not been consistent. In another follow-up tweet, Michael Burry accused index funds and exchange-traded funds, ETFs, of driving up asset prices without minding the consequences it could bring. This is why he warned many investors about any decision they make. No wonder he had to virtually liquidate his U.S. stock portfolio in the second quarter of this year. Scion, which owned 11 stocks worth $165 million at the end of March, only held a $3.3 million position in a single stock 3 months later. This may be pretty unbelievable, but it's just how the current market is. Burry said difference between now and 2000 is the passive investing bubble that inflated steadily over the last decade. Burry has been predicting a devastating market collapse for a while, pointing out that the greatest speculative bubble of all time is near, which could end in the mother of all crashes. Since the government isn't helping the situation, investors and individuals now need to wise up and work towards the coming reality so as not to suffer heavy losses. That's it for today, guys. It's been nice having you here. If you enjoyed the video, do well to subscribe to our channel and give this video a like. Thanks for watching, and we'll see you in the next one.